India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Coming out of a holiday-shortened week, it looks like we're coming out of a long weekend. It was not. Friday was working, but Thursday was not. So I think it's kind of looking like one of those. This is a fresh new week. Markets are looking good after Friday's big rally. We're coming to you live, as always, from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi, and Mangalam is here today with us. Guys, good morning.
Morning.
Hi,
I was
morning.
one of those lucky people who happened to get an approved leave on Friday, so made
He did get the long weekend.
4 days. That was me. And coming after the results season, budget and all of that heavy period, it looks like we're in a beautiful space right now, just calm. Markets are doing well. Monsoons are good, weather, everything's fine, and we're on set of the festive season.
Yeah.
So nothing can go wrong, touch wood.
The thing is, when you work 4 days a week, 5 seems long, but then we get back to it, and it's just it's par for the course. But in that holiday-shortened week, markets had a rollicking ride, a huge pullback, right? And I think the question this morning is whether we'll see more of it, or whether that extreme sort of yo-yo effect of down and then up, whether that's out, and then we get into some sort of an equilibrium.
I think it's the former, not the latter. I think it's past. I mean, the big sort of events, and I think it's not something we will easily, forget. And we're talking about, of course, the 2nd of August, 5th of August events. But there's been no, it's not ricocheted back in any shape or form, that big week. But as always, let's begin with what you need to know as we begin another day, another week. So Friday was excellent. You essentially had a 400-point Nifty rally, and that in one session took us past beyond the 20-day moving average. It looked a little iffy. There was even one sell-off early on. In the first hour, the market actually gave up about 100 points, and then it picked up pace and continued higher. It then sort of crossed the 20-day moving average and kind of stayed above it for bulk of the session. The 20-day, of course, at about 24,480 or so. I'll get to levels in a bit. Now, S&P 500 on Friday, no real surprises, a little higher, about 0.2%, and Nasdaq about 0.2%. You had the 10-year yield in the US, which is now kind of steadying at about 3.88. It was down about 3 basis points. The dollar index has seen a big sell down. On Friday, it lost about 0.6%, and we're at about 102.4. So this is good news for emerging markets in a risk-off environment and caused by sort of global uncertainties or a fundamental shock, etc. The dollar tends to appreciate because people sort of rush back home. But for emerging markets to do well, you want the dollar lower, not higher. Spot gold, it was a blink and you'll miss kind of moment. It hit $2,500 on Friday, and this is something which is interesting from an India perspective as well. And we'll talk about that. All these jewelry stocks have done phenomenally well. Of course, the gold financiers are not doing too badly either. Second-tier data in the U.S. on Friday was a mixed bag. You had housing starts, which were soft, and the University of Michigan sentiment indicators was a little better, although the inflation component there hardened a little bit. Markets this week, as we go into the rest of the week, focus on this Jackson Hole Symposium where central bankers will speak. Of course, you'll have lots of them speaking. The highlight, the main event is Powell's speech, which is only on Friday. That is still, some time away, end of the week, essentially. So where does all of this leave us as far as, levels are concerned? The Nifty is now beyond the 20-day moving average, which is, as of Friday's close, at 24,477. And that's the first level that the market needs to stay above. Respect. That's essentially a very important short-term average, always on the way on a break down and on a break higher. I would say that, and I was saying this on Friday morning, sentiment got extremely overdone negatively in the very, very near term. And that kind of met, of course, Thursday's big Wall Street move, and you got the Friday session. But I think you look around you, dollar is down, yields are well behaved. Global markets are kind of getting back to a more stable zone. I'm not saying it's a up and up kind of a session, but I think, the worst of what we saw starting the 1st of August, that 1 week that is not sort of coming back to us in any big way, at least not right now. So the immediate resistance for the Nifty is the upper end of the gap level. That's the sort of global market caused gap around the early August period. That is 24,686. So that is that's the next target for the market. And of course, beyond that, you're looking at that 25,078 level, which is, of course, the all-time high. Supports, of course, for the Nifty come in around the 24,100, where the market has taken support many times in the last 10 odd trading sessions or so. So 24,686. And after that, we'll see if the market wants to sort of continue in an uninterrupted fashion. Supports at 24,100. The Nifty Bank had a very nice rally on Friday. It's the weaker of the two indices, but it's yet to hit its 20-day moving average. So that's the first level. That's 50,922 for the Nifty Bank. It's about 1% away. Immediate resistance after that is, before that level is 58.30. That is a swing high for the Nifty Bank. And then, of course, you get to the 20-day moving average. Support for the Nifty Bank comes in at the 50% retracement of the move, which essentially is at 49,717. Again, a level which the Bank Nifty has spent a lot of time over the last fortnight or so trading around. GIFT Nifty will come up on your screen. I think it's a higher start, 70-point higher start. And we are going to start, I think, around, if these numbers hold, around that upper end of the gap level, which is about 686 or so. But that's essentially the GIFT Nifty. The spot, of course, will also be tracking that. But it's a higher start, and hopefully we continue to build on top of that through the course of the day. Surabhi.
Prashant, I'm just wondering, this time at Jackson Hole, what will the central bankers talk about? Hey, are you cutting? Okay, wait, I'll go on hold. Well, I won't go up. You're going down. We'll go in this together. So I don't know, maybe a little more interesting than usual, that symposium. But only at the end of the week do we start getting the headlines from there. The Asian markets this morning, they're actually off to a bit of a quiet start. So if you look at most of them, Japan and even the Chinese markets, which are trading right now, a little bit of red. So a bit of a consolidation as we kickstart the week. The machinery orders data out of Japan, that's missed expectations. So it's kind of keeping the bulls reined in as we kick off. Anyway, to sort of wrap up last week and the extent of the moves that we saw, the ferocity of the pullback. The S&P 500, 3.8% higher. US tech pullback. If there were any naysayers, they were completely stopped in their tracks, because look at the Nasdaq, up 5%. The Dow was okay, around 3% higher. The Nikkei pulled back 7.9% last week. Again, I'm just putting the numbers on the board to sort of put in context the ferocity of the move on the other side as well. As a contrast, the Nifty moved up only 0.5%. So is there going to be more of that recoiled spring effect that plays out here for our markets? The distance from the peak, just to again put the numbers in context, Nifty is about 2% away from the all-time high. Mid-cap index is about 3% away. The small-cap index is a little over 4% away from the all-time high. And the underperformance of the banks, so the Bank Nifty is around 5% away from its peak. The fund flow situation, well, we had FIs on the buy side on Friday. So will there be more of this, if this is a trend reversal or not? We need to track. But this is after many, many days of consistent selling. Do we have a small buy figure, 766 crores? Domestic institutions, as usual, were buying 2,600 odd crores. Now, some numbers have come in on the domestic front. The situation for banks and the fight for deposits, that's really telling, because the latest data that's come in, the fortnightly data that we get from the Reserve Bank of India, this is X of the HDFC merger impact. Credit growth is running away at about 13.7%. Deposit growth is lagging, as usual, 10.6%. So the gap remains. And even if you include the HDFC merger, then the deposit growth is 11% and the credit growth is 15%. So there's a fair amount of gap. So let's see. That's something that's been an overhang on bank stocks. We'll see how the reaction is today. There's lots of manufacturing news and good news, actually. So there's Escorts Kubota. They are looking at a big investment, perhaps in UP. That's where the talks are on land acquisition. 4,500 crores is the amount that they're looking to put to work. And then watch out for a lot of the railway and metro infrastructure stocks, the likes of BEL, BEML, and even L&T, etc. People who are involved in the construction of metro projects, because the numbers are pretty big. This was all cabinet approval coming through. So Bengaluru is 15,600 crores, Thane Metro is 12,200, and for Pune Metro, the expansion project, it's about 3,000 crores that has been approved by way of investment. So tendering will start. So expect some buzz around this side of the market. So I think we're back to looking at Q's earnings season has drawn to an end. And by the way, there's a big split. We'll talk about this as we go forward. Big split between brokers and the way they are calling it. Morgan Stanley seems to be the most bullish at the end of the first quarter results season. There are others who are turning a bit skeptical about the pace of earnings growth. More on that as we go forward. GIFT Nifty is pointing to a positive start. But as I said, Asia is a little more cautious this morning.
Well, Asia is a little more cautious. What's actually interesting is that if one uses the holiday, analogy itself, are we taking off or is it just taxiing? That's the big question, right? Because the reversal happened from extremely oversold zones. The rally happened towards levels where we're closer to congestion zones. So that's the big question, right? Is it a reversal from lower levels or something has fundamentally changed? Because if you discount even the August 5, August 6 lows on the Nifty, the budget day low was 24,074. August 8, thereafter the low was 24,079. And August 14, one day before where we saw that big move, the low of the Nifty was 24,099. So those are lower levels which the market is respecting. Two things can change that. One, the IT index. Nifty IT index led the charge on Friday. In fact, the Nifty Bank did well, but the IT index was actually up 3%. An improving US outlook supports that sector. That's also the sector where, if you made a Venn diagram of valuations, having not done anything else, and improving prospects with lower multiples, maybe the common shaded area would be the IT pack. So that's something we'll be watching out for. Yes, the flows returned on the cash side, both the DIs and FIs bought, but also there was purchase of 2,300 crores in index futures. The prior two trading sessions, the FIs actually went net short on index futures. So some of that was, unwinding of those short positions as well. So if you look at it, they added about 18,000 long contracts and covered 16,000 short contracts. So if you look at the last three trading sessions, on August 13, the FIs went net short to the tune of 21,000 contracts. Long positioning was 48%. That increased a little bit to 30,000 contracts. Again, long positions went down to 47%. And that up move has led to some of those shorts being covering their positions, longs being added. So net contracts at 4,000 contracts. At 50%, it's an even keel yet. The 24,200 call writers covered their positions. 24,500 put writers also wrote some contracts telling you that there is support which has moved higher to around that 24,400, 24,450 mark. But on the way up, 24,800 call writers are still active, telling you that the earlier congestion of the Nifty, which is between 24,800 and 24,850, may continue. So if you just had to look at the range on the Nifty, maybe the 20-day moving average is a lower level. Prashant did point that out. 24,477 would be a support. On the way up, 24,800, 24,850 is the congestion zone that we need to navigate before we go to all-time highs. And what is it that can take us to all-time highs? If the Nifty Bank goes past its own congestion level of 50,900 to 51,300, that 400-point band, because that's where rests the 20 and the 50-day moving average. Apart from the IT sector, I'm looking at Birlasoft as a stock today. Why? Because one, IT stocks are doing well in general. That stock was 6% higher and also got out of F&O ban. So that's something that could be on one's radar.
All right, Mangalam, thanks very much for that. So IT absolutely has been doing well. And if US stays as it is, which is in, by the way, the S&P 500 is just 2% away from its highs. That's quite something, right? Just like that, in a fortnight or so, we've seen so much. Lynn,